Thank you so much for taking out time for us today. I'd start by asking, when you assumed charge of the ministry, what was the situation at that time, and what key differences have you seen in these last few years?
Yeah, so I've been now in the job for almost a couple of years, and from where we started, we were in the process of already recovering as an economy, because it's to Prime Minister Shehbaz Sharif's leadership that he was able to negotiate the 9-month SBA with the fund, which gave us the breathing space. And when I came in, we were quite clear that we are going to go into an extended program with the fund, really for two reasons. One was to provide more permanence to the macroeconomic stability, which had just begun to, at that point in time, talking about sort of March 24 time period. And secondly, the administration's firm resolve that we are going to undergo structural reforms and to carry that under that umbrella. So fast forward, where we're sitting now, we have been able to consolidate the macroeconomic stability gains, and it's reflected in many ways. In terms of our fiscal situation, we have had surpluses on the primary side, consecutive surpluses on the primary side. And if the current trajectory, inshallah, continues, we'll have one of the lowest fiscal deficits in our history during this fiscal year. The current account continues to be in good shape, notwithstanding some of the growth that we are now beginning to see, and which is the good story, and the LSM turnaround. But as you know, because we have an import-dependent economy, at times we have to be very observant about the current account situation. But alhamdulillah, that is moving in the right direction as well on the back of very strong remittance flows. We had $38 billion last fiscal year, and during this fiscal year, we expect to close at about 42. And then the IT export services story is just a fantastic story, and it continues to move from strength to strength. So we should be anywhere between $4 to $5 billion this year, while we are focusing on our traditional export sector. Inflation has been a good story. It's down into single digits. The policy rate, therefore, has come down to 10.5%. We have a stable currency. Our FX reserves, which had gone down to roughly 2 weeks of import cover in sort of July 23, are now up to about 2.5 months of import cover. And if all goes well, by the end of this calendar year, we should be at 3 months of import cover, which will be a very good international benchmark.
Right. And over the last year, we've also improved our diplomatic standing. How has that helped us secure more economic partnerships or agreements?
Yeah. So in addition to the macroeconomic stability and the green shoots that we are now beginning to see on the GDP growth side, I have always maintained that over the last, as you rightly point out, the last 10 months or so, we now have geopolitical tailwinds, right? So the relationship with the Trump administration continues to go from strength to strength. I've just come back from Washington, D.C., where the Prime Minister was there for the Board of Peace meetings. On the back of that, I had some meetings with the U.S. administration, including Secretary Lutnick on the commerce side. In terms of trade and investment flow, that's now the basic discussion. The same thing with China, now with the CPEC Phase 2.0, which has been launched, and then with the GCC countries. Now, these have been traditionally very, very strong partners, but now with everything that we have been able to do on the diplomatic front, now we want to build on that by moving from an aid-related and aid-led model to trade investment model, number one. And number two, primarily we want to go in for business-to-business engagement. And that is the discussion which is now well underway, whether it's CPEC Phase 2.0, which is sort of B2B. You saw the Saudi delegation was here, which was represented by various businesses. And we'll have the first investor conference on March 31. And I was with the US Chamber of Commerce. Our Minister of Petroleum and Minister of IT will be there, very focused on sectors like oil and gas, minerals and mining, and IT to woo further trade and investment from the US investors.
You mentioned your trip to the US, and that brings up tariffs, which have been back and forth since the Trump administration came to power. And recently, we're hearing that the US Supreme Court actually scrapped tariffs. So, how will that impact Pakistan's trade?
Well, if we go back to when this whole discussion started, back in April of last year, what the US called the Liberation Day, we were put in a category of 29% on the back of the trade deficit that US had with us. We were able to negotiate it down to 19% end of July, and we were in the process of now moving towards a joint statement and framework agreement, but with a very clear view, and that was part of our discussions with Secretary Lutnick as well, that we don't want to be competitively disadvantaged from any of our regional competitors. So we were sort of advancing this discussion when the Supreme Court decision came in. Now, as you know, the US government has now announced a global 10% tariff, but from the discussions we have had with them, early days, they're still determined to bring the tariff regime back to where it was, although through other measures. So our discussions with them will continue. We're both with the Commerce Secretary and the USTR, that if we were to go in that direction, that we continue to get a favorable consideration vis-a-vis our regional competitors. Right. So the story has not ended. It's just work in progress. Let's put it that way.
Okay. And then moving domestically, the stock exchange has been declining over the past few days, and some people are saying that actually means that the market is correcting itself. So how do you assess that situation?
Well, you see, the stock market, I think in the first instance, there's some good things which are happening there. The number of investors have expanded in the stock market. And so there is a real impetus in that market from where we started, 12 to 18 months back. The reality is the markets will go up and down. These are, you mentioned the domestic, it's the regional tensions which are going on at this point in time. There are many things which weigh on to, especially the foreign institutional investors which come in. My own view is that it's, hovering around PE of 8. There's still a lot of opportunity in the market, and it'll have its up and down. But I do think that as things stabilize in the region, things will start moving in the right direction again.
Right. And how do you assess Pakistan's economic stability at the moment?
Yeah, I think we are well into our stabilization phase, and the whole discussion is now how do we move what I would call sustainable growth, because that is very important, right? And anyone who has covered Pakistan for some time knows that we have gone through boom and bust cycles, and therefore we are in the program back with the fund. So this time around, we want to be very clear that it's export-led growth, so that when our growth gets to a certain stage, we do not get into a balance of payment issue, because that's what's been our history going as recently back as 22. So we've taken a number of steps in that direction, including a very bold reform in terms of our tariff regime. While maybe some of the world has been moving towards protection, we decided back in July that we are going to open up the economy, by bringing our tariffs down over the next 4 to 5 years, down to an average tariff of 15%. And the reason for that is that we have protected our industries for the longest time. And we want to ensure that all our industry here is internationally competitive. And therefore, reducing the tariffs in terms of raw materials, reducing the tariffs in terms of intermediate goods, so that they are able to, reduce their cost of production and become competitive to export. So there is a lot of emphasis on export-led growth. It takes time when you make some of these changes. As I said, IT is already a very bright factor. Agriculture is going to, notwithstanding the dip at this point in time, will remain a huge potential for us. Pharma will remain a huge potential for us. This is in addition to the traditional textile sector, where already the value-added garment space, we are seeing sort of good traction there. So there's a lot of focus right now on seeing how we move towards sustainable growth.
And going off of that, are there any other recent measures that the ministry has taken for economic continuity or to maintain fiscal balance?
From our perspective, there are few things which we take the lead, and there are other areas where we support other line ministries. So I'll give you examples. In terms of making sure that we move towards fiscal sustainability, the whole taxation machine and FBR is undergoing transformation in terms of people, process, technology. In fact, the Prime Minister himself is sort of leading that initiative. So we were hovering at about 9% tax to GDP. We are now at about 10.3% in terms of FBR tax to GDP, and we want to move towards 12-13%. And it's a function of both, stopping the leakages, stopping the theft, and that we are doing through AI-led production monitoring, AI-led CRM. So technology is playing a very, very important role with the help of data-driven decision making. So we are driving that between finance and revenue. Similarly, the pension reforms. Again, the finance ministry took the lead in that. While the stock is there, we have stopped the bleeding in terms of moving all new government colleagues who join us in the federal government are going to be now on defined contribution as well, which is again a very bold reform. The third one is the right sizing of the federal government. So we have recommended to the cabinet to merge some of the ministries. We have closed some of the departments like Utility Services Corporation, PWD, in the process of closing PASCO. Simply that the misuse of subsidies is minimized. We are also helping the Privatization Commission. We have now chaired the Cabinet Committee on SOEs. We have handed over 26 SOEs to the Privatization Commission, and they now have real tailwinds on the back of very successful PIA privatization, also the first women bank. So they have a number of assets which are there. Then we help other sort of line ministries in terms of their reform processes, whether it's on the power side, whether it's on the petroleum side. And then a big thing for us is also access to finance, right? At once the financing rates have come down, even people who had leveraged balance sheets, policy rate coming down from 22 to 10.5% has helped them in a very big way to create that capacity. We are also trying to see how we reduce the debt stock, but also reduce the interest cost as well. So our debt management office has been sort of restructured, and we are doing liability management trades. So we saved about 850 billion rupees in debt servicing costs last year. And this year, we expect another 1 trillion rupees of savings in debt servicing cost, which can therefore be then repurposed for other areas and can help our fiscal deficit situation. The last thing I would say there when we come to access to finance is how do we help the state bank and in turn the banking system increase lending to the private sector. especially to the priority sectors, whether it's agriculture, whether it's IT, whether it's SMEs. So the finance division then provides first loss guarantees, so that in case there is a loss situation in the first instance, we will help the banks in terms of some of that loss sharing. And the other thing is providing subsidized financing. So we ask the banks to further reduce the lending rates to the eventual customer, and between their cost of funds and the rate at which they lend to the eventual customer, whether it's on the housing side, whether it's on the SME side, that bridge is done by Ministry of Finance through our own sources.
And lastly, where does Pakistan stand in terms of its commitments to the IMF?
I think that's a very timely question because because the team is already here. I mean, they started with Karachi, and I'll see them, inshallah, here on Monday. We are getting up for the third review, and that review will have both the performance discussion in terms of where we stand in terms of our quantitative benchmarks and our structural benchmarks, and also having a little bit of forward-looking view, because we are sort of halfway through the extended fund program. So we'll look forward to very meaningful conversations. It's always premature before, I mean, the way we take our exams, I mean, take our tests and, go through our audits, it's always premature to say how it will go. But I would say that we are well positioned for this review.
Great. Thank you so much for your time.